Been a pretty decent buy of the dip today. Let's talk details and levels with Mr. Kevin Green joining us for a look at options, flows, and the charts. Senior markets correspondent, KG, not a bad little day, kind of going into the last 30 minutes here, roughly even.
Yeah, you could say that we had a really nice buy the dip type of activity here today, especially when you're kind of looking at the broadening of this rally on an intraday basis. We started off very defensive when you're looking at the healthcare stocks. They caught a little bit of a bid. Materials was catching a little bit of a bid, but now you're starting to see that kind of permeate throughout almost all of the sectors. I think only 2 sectors are down on the session so far going into the close here. So that was actually a really decent recovery. But when you're looking at the daily chart here, a couple of things to kind of note. Highlighted this last week, the 20-period moving average did cross below that 50-period moving average officially. So that is a little bit of a bear cross here. Let's see if the market's really going to take that up and say, okay, maybe we should see a little bit more selling pressure here. But when you're looking at the close, you really wanted to kind of get above that 58.30 level, Oliver. Basically, we're going to be closing at the closing lows that we saw on Friday of last week. Once again, it's not a massive down day. You had broader participation in the market, but you did want to recover a little bit of that ground that we saw on Friday. On the good side, we went and tested that election gap. And for the most part, we have tested it on an intraday basis. So buyers could step in here. Maybe we continue to try to move higher or at least try to move back up to that 50-period moving average before trying to fail here. Another thing to just kind of note when you're looking at the volume, and we're going to know in the next 20 minutes or so, if the volume actually is a little bit light for today, I would be a little bit concerned that this might be a little bit of a dead cat bounce, even though we are down on the session, a little bit of a dead cat bounce. You'd like to see volume kind of exceeding the 10-day moving average. And right now we're kind of nowhere near that at this point in time. And if that's going to be the case, I would still be a little bit cautious. But going into the close, what do we need to do? We need to really basically hold this level that we're at right now. Any type of failure or fundamental failure from there, when you're looking at that 59 or 58.20 level, you could kind of see us breaking down a little bit. For today, what was really nice, we made higher lows on an intraday basis the whole time and higher highs. If you kind of break below that 58.18 level, that's when you start making those lower lows, and that's where it gets a little bit dicey going into the close. You just do not want to see an unraveling of options positioning, especially on the call side, which was getting a little bit aggressive when it came to the call buying after about the first hour and a half in the session. So let's hope that those flows are sticky. And if not, we have some pen risk sitting at 5,800.
Okay. So the pushback against the bears today is enough to kind of keep some hope alive, I guess, that this is not like beginning of a new range, like breakdown into a range below 5,800, but we did snap the main level we were watching coming into this, so it kind of has to be appreciated that too. What do you think are the odds that we could go sideways at this level? I mean, we did for a while from October to until the election, basically, but that was obviously presaging like a big event. Do you think we're more likely to see swings of magnitude right now than go sideways? Or take me through your thought process on that.
Yeah, Oliver, I would say that we probably will have a defined, trend either to the upside or downside by the end of this week. That's what I'm kind of looking at, especially when you're kind of aligning it with the economic data that's going to be on the calendar. Everybody and their mother is expecting a very hot CPI print. We're all on one side of the boat here. What happens if we actually do have that CPI print coming in line with the street's expectations? You might actually get a rally off of that. And that's one thing that I'm kind of keeping, in mind here. And then we also have earnings season. So I don't think that we're going to be in a defined range by the end of this week. I think we're either going to continue to break those election, that election low that we saw, and or we try to recover and at least try to hit that 50-period moving average. That would be my guess. We also have expiration, the monthly expiration this week is occurring as well. And this is going to be a leap expiration. So this is going to be one of the bigger expirations that we're going to have all year. Actually, probably the second largest that we're going to have all year when it comes to premiums expiring. That also coincides with fairly large volatility in the market. So there's a lot that's on the calendar, not even just looking at the technicals, just on the calendar alone that says that I think we're going to have a make or break week, either to the upside or downside. When you're looking at the candle structure today, and if we have a little bit of follow through tomorrow, let's say we get half back on that Friday candle to the upside, I think that gives the bulls a little bit more confidence that they can get up to that 50-day moving average. But when we test that moving average, do we start seeing large volume? Do we start seeing those selling into strength? That's the biggest risk that we have, and where we could have a massive reversal towards the end of the week. Today is a draw in my book, right? It was you have a green candle for the most part, right? It's okay. We're going to be ending probably either flat, maybe slightly positive, maybe a little bit negative. But we did not gain any ground on Friday. So I think this is a draw for the bulls and the bears. And we might just be waiting until that CPI print. PPI might also give us a little bit of a jolt too, but that's probably going to be a little bit more bearish on the market than bullish.
Just the nature of when you start breaking down, right? You start to establish levels of resistance overhead, which is essentially what you're telling me there. And if the moving averages roll over more, then that could apply even more pressure. So it's sort of a bit of a race against time to kind of get things back on the up before you start really seeing momentum increase to the downside.
And if the volume doesn't complement that, a lot of people really discount volume, but I'm a really big proponent, especially when you start seeing fundamental breakdowns in structure like that head and shoulders pattern. Usually once the volume starts to lighten up towards the end of the trend, that's where you start seeing these reversals. And then you have a pretty big power candle on the volume side that really does complement a reversal. Today, it just doesn't. It doesn't say that this is going to be the bottom, and maybe it is, but it just doesn't show that when it comes to the volume. You'd like to see a really strong day, getting back half gap on that Friday, very large volume, really trying to eclipse the Friday volume if you can, and then that's where you kind of get the bullishness in the market. And this might be a situation too, where if it's defensive positioning for January and February, you might not get those large volume candles, but you might get the underlying market when you're looking at some of these other sectors really catching a bid, and that's something that we also have to highlight. The S&P 500 equal weight's up about 0.6% in today's session. So there's some green on the screen. There's some internals that are looking fairly good here, given the nature of the sell-off that we've seen from a lot of these sectors over the last 2 weeks. Some of them appear like they are trying to bottom. We just need mega cap tech just to hold on. We don't even need them to really bounce back really aggressively. They just need to hold on to the levels that they're at right now.
Sure. All right. Let's talk vol real quick. VIX, looking at some seasonality. You got a chart for us there? I know we've hit this one a few times. Give us the update.
Yeah, let's continue to hit it though, because this is very, very key, right? We had the flush to the downside when we started the year, and then we had that pop. Obviously, we had the 20 VIX. This is really on trend, and this kind of gets you a little bit more perspective as to saying the world's not ending yet at all, right? This is kind of normal, seeing this type of rotation, defensive rotation, profit-taking post-tax season when you kind of get to the end of the calendar year for last year. And so we're not out of the norm when it comes to volatility. And we probably will still see elevated volatility. If the elevated volatility still remains in this market and the technicals are really holding up, which they are, both to the upside or downside, this is a really great environment when it comes to intraday traders or even swing traders in this market. We still have some headwinds when it comes to February and even the end of January. And that's going to really probably kick off on this expiration Friday here, but it's not like we're seeing this massive blowout in vol and the world's just crumbling down. This is normal. For some perspective on the market here, we also did not have a big breakdown in structure when it comes to the longer term trends for the E-mini S&P futures too. That's also something to keep in mind. We're holding that 100-day moving average for the E-mini S&P.
All right. Love it. Thanks, Kevin Green. Good perspective.